From the floor of the CME Group, this is Danny Riley on this Tuesday, October 12th. We're into the October expiration, and we're going to start up by kind of looking at some of the cash study, the S&P cash study for the expiration. Over the next couple days, Wednesday, Thursday, and Friday are all statistically up days. Today, on the other side of the coin, has been a down day. There was some information out of China that China wanted to hold back some of the lending that the banks are doing to stop a potential bubble. And then there was also some news that the Fed may not go into any kind of quantitative easing that they've been talking about, or that the street has been talking about for the last couple of weeks, that they in fact may be looking toward a bigger stimulus package going into next month. This had the S&P down 5 or 6 handles overnight into Globex, and then down about 9 at the most at the lows of the day. Now the S&P has bounced back a little bit. It's back up toward the 1160 level. And again, I think that the critical thing that you've got to look at here today is the way the markets, when they do sell off, the days that we are down, they're not down that much. And the days that we do sell off, that back and fill pattern continues to exist in the S&P. Now, one of the things we're going to flip a little bit. Now that's on the positive side. But on the negative side, we're going to talk about the VIX a little bit. It got down to 15.5 earlier in the year, and then it made its way back all the way back up to 49, and yesterday it closed below 19. Now, in between the 15.5 and 19 or 18 level is a critical area of support for the VIX as we get up toward these highs in the S&P. It's got to be something that you've got to keep on your radar moving forward. Now, we'll let Jamie from the VIX report kind of fill us in on the next part of this, but it is something that we're really getting concerned about in the S&P as the S&P goes higher. 15.5, 16, 17 in the VIX is going to be a critical level. We'll see you tomorrow.
You'll notice the S&P 500 down 2 as I'm speaking right now, but the VIX futures are leaking downwards. And the reason for that is all of the lack of movement we've had over the last several weeks, up 5 days, up 6 days, now today down 2. It doesn't line up with the VIX level that's in the 20s. We're seeing realized volatility that's well below 16, and so you are seeing the VIX drift down below 20, and the VIX future, the October future, is following it downward. The October 20 puts are now really picking up value as people are starting to assign a real probability that we will settle below 20. There's still obviously a probability that we can settle above there, but a couple weeks ago, 20 was still off the table. Those puts really didn't have a bid. And right now, they're trading 40 cents. So people are now believing that, at least in the short run, the next week or 2 or 3 weeks, a sub-20 VIX could stay.